real meaty content here. This is going to be difficult for very basic traders to understand, and it's not that important, but if you're looking to get to the highest level of trading, this is going to be extremely important, and it will highly impact your trades. Now, price delivery, or in other words, just how price moves, how price is delivered, revolves around four basic concepts, and that's retracement, reversal, consolidation, and expansion. Now, these are basically just the times you want to be trading. You want to be trading between 12 a.m. New York and 3 p.m. New York. Outside these areas is known as dead time. You should basically ignore them, and it's also very difficult to trade. It's not a whole lot of volume. I also recommend not trading between I think it's 12. You can look it up. It's the New York stock lunchtime. I think it's between 12 and 1. Noon and 1. It can also be times of low volume. That can be that I would recommend sometimes avoiding. Now, that's indicate you can show here. It's midnight in New York and 3 p.m. in New York. So yeah. So first of all, to start it is expansion. So expansion is where price moves quickly from equilibrium. So remember, equilibrium is the middle point. It's the 50% level between a high and a low. So why is it important? Because when price moves quickly, there is a willingness, or there is a chance to see what the market maker is trying to do here. We can see what their intent is, and we can use the order block. The order block the market maker leave at equilibrium can give us an idea into where price is going to move. So you can see here's the equilibrium point. We create a bullish order block here, and this gives us an indication to buy. Now, what is retracement? Retracement is when price moves back within the range or back within the equilibrium point. And this also tells us we can also look for FVGs and liquidity voids to indicate a possible retracement. And as we've seen in other as I've already explained in our other videos, you should be fairly familiar with those two terms. So we're going to see an example of this in the next slide. A liquidity void is created by a very strong sell-off. Price fills liquidity void and we move down back into equilibrium. Which item? He hasn't put it on. I'm following his slideshow, but I'd imagine it's down here. You'd have to zoom out. So now a reversal. Sorry, is that right? Oh, sorry, yeah. A reversal now is when price changes direction that's originally going. Now, this is very difficult to do in FX. It's generally best to try play the trend, because more than likely it's going to continue in its trend unless you spot a reversal, which is what this can help. So yeah, as they've basically just said here, it's when the market makers have moved into stop losses, they have enough liquidity to change their desired direction and to now move in an opposite direction. And in order to spot these, we're looking at liquidity pools and we're looking at old highs and old lows. So as you should be already fully familiar with, if you've watched the other videos, old equal highs taken, equal lows taken, equal highs taken, and so on. It's literally just a game of longing and shorting old highs and lows. Now, was consolidation? This is when there is no willingness to move. It's where we're just moving up and down, up and down. It just seems to be no direction. Um, sometimes this can be hard to trade. Sometimes it's best to leave it be, unless we see something within that, like a brief move within the equilibrium that may hint at a further sign. So as you can see here, we can create equilibrium levels. Like we may have a strong wick to the downside. We can then use this to create an equilibrium point and then long or short the premiums or the discounts. So that's it for ICT trading. This is probably the majority I'm going to cover for now. I do recommend you watch the previous videos first, as I fully explained a lot of what we've just covered there. That's just bringing all the knowledge I've talked about into one video and explaining how you can actually use this and putting names on them as such. So hopefully this has impacted your trading experience. I'm going to be doing more videos, of course, but this is the bulk of the good, juicy content that is extremely important for you guys. If you want to watch the full mentorship, you're more than likely, I'd be more than happy to show you a link. I think it's ICT Mentorship 2022. You can find it on YouTube, a free playlist. Fire away. But it will cover a lot of this, and a lot of it is just him waffling on. So I hope you enjoyed the video. I'll see you in the next one.